market for a new car and I've been debating with my husband whether it's time to go full on electric. Also, one of my biggest crushes since college has been Elon Musk, obviously. Well, Elon's been at it again. He's upped his Twitter game, and this tweet has sent Bitcoin tumbling this week, causing both Bitcoin and Tesla to decline, denting his net worth by $15 billion, guys. However, it is this drop in Tesla that I am really interested in, as a community has been enamored with not only Tesla but the electronic vehicle market in general. And beneath the headlines, we do need to understand what is causing Tesla to reprice, and it has less to do with Bitcoin and more to do with the industry in which it operates. Now, I watch a lot of YouTube, and last year one of my favorite personal finance YouTubers, Chicken Genius Singapore, don't ask, I still don't understand the name, released an excellent video on why Tesla was an excellent company to invest in, but to be very wary of other electronic car markets. So let's sprinkle the facts and explore this. Firstly, Lucid Motors, who are due to sell cars as much as $169,000, has, guess what, not sold a single car to date, but expects to sell just 20,000 cars next year and will not be making profit for at least 3 years. But despite the uncertain start and the ramp of profitability and no feedback from the market on if the cars will even sell, the company's announced this week to go public at a valuation of $24 billion. To put that into perspective, this is the same value as Peugeot, who make over 2 million cars a year. Now, how does a car company like Lucid come to market to support a valuation of $24 billion? Well, cue another YouTuber, Sean from Savvy Money Show, who mentioned SPACs last year. Now, SPACs are being dubbed as listed blank check companies. SPAC stands for Special Purpose Acquisition Company, and they're listed vehicles that build capital for participating in IPOs. The clever thing is they're listed, so they're raising money from the public. Now, that already makes me a bit nervous, in that why would a normal private equity firm or professional money managers pass on these IPOs for them to be then in the public domain through a SPAC? In any case, the Lucid deal was being supported by Churchill Capital, the 6th SPAC, which was bid up in the run up to the Lucid announcement. However, this is quite an important point. The SPAC has fallen by 40% at the time of this video, and the news of Lucid's IPO, for those of you here in the UK who use 212, you will likely have seen the push notification on your phone. Now, it's beginning to feel like the chickens are coming home to roost and that the boom in electric cars is coming to an end. It would be great to get your thoughts on this, so cue comments below. However, Tesla, the star, the darling of the electric car movement, fell for 2 days straight, and now it's down around 10% this week so far. NIO, the Chinese car maker, has followed a similar pattern. Now, both NIO and Tesla make and sell cars. Those that don't will have some trouble in the market. Those stocks in companies trading purely on expectations, such as Nikola and Fisker, have been battered worse. Now, the commonality between this segment and the volatility is the use of SPACs. Fisker and Nikola also use SPACs to go public at valuations of billions of dollars, and there are even more out there, such as Lordstown Motors and what was the other one, ChargePoint, that will create the charging networks. So in the UK, we've got Arrival, which will make British electric vans. It's all exciting stuff and will also likely use a SPAC. But what's a SPAC, and why could it be bursting our bubble and love affair with these electric vehicles in the first? So a SPAC is normally labelled as a blank check firm and exploded in popularity last year with booming stock markets and plummeting markets, and investors trying to seek out investment opportunities and places to park their cash, really. At the same time, electric vehicles were booming in popularity, so spearheaded by Tesla itself. Now, the two situations create the perfect storm in a teacup. Now, I know I have FOMO when we see massive rises like this on something that is happening right under our eyes, like SPACs and electronic cars, but when you lift the hood, excuse the pun, SPACs in a nutshell make it easier for companies to go public on expectations rather than reality. And that's the issue, guys. As investors, it's the expectation that leads up to pricing up a market higher than it should be, and a correction will come, and in a single exposure market it can be a lot worse than a diversified stock market correction, which can also be quite horrific. But we move. The comparison now is being drawn that electric cars are now showing the craziness of the dot-com boom days, when companies with no proof of concept and no sales were commanding sky-high valuations because they were just in the right segment at the right time. There is just too much investor demand for opportunities that the supply outstrips the demand, and companies can exchange hands for absurd amounts of money. But again, let's just sprinkle the facts quickly. The electric car industry, combining all the companies, is now approaching a value of 1 trillion, and the total combined valuation is 1.2 trillion. Just think about that for a moment, guys. Electric car companies are almost worth the same as traditional car markets. All the while, electric cars only make up 3% of global car sales. This itself is just mind-blowing. Now, in no way I'm trying to say that won't change for the better for electric cars. I fully accept electric cars are the future. But as in the dot-com boom, there are just too many operators, and there will be few that will be carrying on the revolution. I mean, the internet torchbearers, we can summarize to a single word, FANGs, to denote the stars of the tech world that came from the dot-com boom. Lucid could be the market event that brings lucidity to investors and a sign that the bubble has now been popped. And with all the tweets, the YouTube videos and news hitting the wire, there is a bona fide fear that the valuations will struggle to keep pace, and even Tesla's capitalization of $650 billion is justified. So even if electric cars are the future, the bubble could still have plenty of casualties. The internet was the future in 1999, but there was still plenty of duds. And speaking of bubbles, we have been hearing more and more about bubble in our stock market recently. And so here is a video where I really wanted to find out if the bubble fears are real, and if so, what we should be doing with our investing. I think as a novice retail investor, we need to put things into perspective and ensure we stay measured in our approach. So this should be a good video for that. So click here and I'll see you there.